Okay. Hello, everyone. Good afternoon from Japan. Thank you very much for joining this webinar, Green for achieving the SDGs. So first of all, I express my thanks to the distinguished panelists, speakers, discussants, and also to the attendees, participants for registering and participating in this webinar, which is a joint event of Tokai University, Yonsei University, and Green Finance Forum of Korea, Asia Research Center, and the International Society for Energy Transition Studies. So the topic is important, and the importance of it increased in the wake of COVID-19. So as you all know, in the wake of COVID-19, investments globally, and including the investments in renewable energy and energy efficiency projects, reduced drastically. So this is endangering the achievement of Paris Agreement on climate change and also several SDGs. So on the other hand, in the wake of COVID-19, new rooms opened for using digitalization and new technologies in different sectors, and it is important to utilize them in the field of finance, especially green finance. So today we gathered to discuss about it in order to provide some practices and also policy implications. So the presentations that we will have today are from a call for chapters that we organized, and accepted chapters are going to be published in a book volume by Springer Nature. So I hope we have great discussions today. So let me invite our first keynote speaker, Dr. Kwang-Yeol Yu, CEO of Seoul Guarantee Insurance and founder of Green Finance Forum Korea, who was a former first senior deputy governor of Korea, FSS, for kindly having his keynote speech. Dr. Yu, please.
Thank you, Dr. Farad. I think my remarks, forgive me, my remarks, whether it's not going to be a so-called keynote speech, rather be a congratulatory remarks given my time constraints facing my new job as the CEO of the Seoul Guarantee Insurance, government-owned insurance company. So with your permission, I will go ahead. And first of all, I'd like to extend my appreciation to the organizer of this webinar, Dr. Farad from Tokai University, and also Dr. Hyun-Suk from Yonsei University. I'm also happy to see Professor Naoki Yoshino. Once again, I think it's more than 6 months. I joined the international webinars hosted by your colleagues. And I deeply appreciate all the presenters and discussants from academias and related institutions, and global efforts to find, that fight against the COVID-19 with vaccines now will pay off hope in the end. But we also find that this type of webinar was quite useful too. And I think I might guess that this will be still valid, powerful tools, mechanisms in COVID-19 eras. As a UK-based economy magazine, The Economist said, the following the pandemic is like watching the climate crisis with your finger jammed on the fast forward button. That's what Economist quotes. And I think this may seems the place where so-called pandemic and climate crisis, I think, crossroads. So let me briefly explain the progress of green finance in the case of Korea. Korea governments and academia actively joined the international society to cope with climate change and carbon neutralities by declaring carbon net zero by 2050 late last year, and also successfully hosting 2021 P4G summit last May in Seoul, via, of course, by online. In line with government green initiatives, the Financial Services Commission has been working on how to implement the targets and on green finance fronts. For example, in the areas of green taxonomies and green disclosures, and scaling up green financing is in the pipelines. I also emphasize the establishment of Korean Green Finance Forum, an open platform that allows the governments, and financial industries, and academia to interact to achieve the government's green targets. So this forum will serve not only as a domestic platform and also but also as a connection point globally. Against this backdrop, this webinar's topic, the green digital finance for achieving the SDGs, is quite, to be honest, interesting to me, because I'm quite curious to know how digital revolution helps to boost green financial, and specifically. At first sight, the green finance and digital revolution, up to my recent knowledge, was quite different topics, but I found that now those topics are put together and to make much more convincing stories for just green finance. So I hope that when today's presentation and discussions are published in a book, I hope that I can get a copy of this book. Again, I really congratulate on these webinars and successful publication of the books on green digital finance based on the discussions today. Thank you.
Thank you very much, Dr. Yu, for your excellent keynote speech, and also congratulations for establishing the Green Finance Forum of Korea. We wish the success for the forum. So next, I would like to invite Professor Yoshino, Professor Emeritus of Keio University and Director of the Financial Research Center, FSA, of the government of Japan, for kindly having his keynote speech. Professor Yoshino, please.
Okay, thank you very much. Can you hear me?
Yes.
Okay, and can you see my PowerPoints?
It's clear. Just please make it full screen.
I don't know whether I can make it the
bottom
screen.
Just push the.
If this is okay, I can keep on going.
It's okay.
Okay, thank you very much for inviting me today. Today, I would like to talk about ESG green investment and its relation to digital technology. First, many people are discussing about ESG, SDG, green bond, and green banking. And I'm going to first talk about some of the definitional differences will make optimal portfolio allocation will be distorted. So I'm going to propose either tax on greenhouse gas or unified credit rating will be needed. So that is the main objective. And SDG, there are 17 goals. However, each rating agencies, KPMG and S&P and so on, define SDG differently. So in other words, they evaluate each company by different score when they look at SDG. And same thing can be applied to ESG. Each rating agency focuses on different points. For example, some rating agency looks at company's ESG effort. Then another rating agency look at degree of disclosure. Then whether the company has ESG policy or not. So they look at the disclosure booklet and then check how much % of the times they have been repeated and so on. So in other words, ESG, SDG, greenness are all very important. However, as you can see here, each rating agency focusing on different points. So they are giving different scores to each company. Same thing applied to the region. European region, China, ISO, they define ESG differently. So which means their scores of each company will be different where they are located. And traditionally, investors are watching at rate of return and risks. However, nowadays, they have to focus on greenness, ESG, and so on. And traditionally, portfolio allocation is first quadrant on the right, rate of return and risk. Then they chose point E is the optimal. Nowadays, many people have to pay attention to ESG or greenness. So one component is added. However, each rating agency has different score. So in other words, in the second quadrant, if the investors ask one rating agency, they will give this black dotted line. If they ask another rating agency, then they will give blue line. So which means what kind of rating agency to ask, then they will give you different portfolio allocation. So that means if we go back to here, optimal portfolio allocation point E will become either G or B, depending on which rating agency they will consult with. So that I can show by this data. And when I looked at the 3 different rating agencies, Rebecca Sam, Sustainalytics, and Bloomberg, and I picked up 2 companies, A and B. You can see scores of ESGs are different from one rating agency to another. Then the allocation of their portfolio between A and B will be different. If you look at Rebecca Sam, 71% goes to company A, 29% goes to B. If we look at Bloomberg, then 54% should go to company A and 46% should go company B. So as you can see here, which rating agency the investors will ask will give you different portfolio allocation. So that means this will distort the allocation of portfolio assets. Then what should be the best? Theoretically, the best one is to charge tax on CO2, NOx, and waste, and globally the same tax rate. Then exposed rate of return will be already capturing the true rate of return for the company. So charging tax on CO2, NOx, TA, company A. TB has another tax rate depending on their waste. Then ex-post rate of return is original rate of return minus tax. And these tax are already capture how much GHG gas they are providing. Then the investors can come back again, rate of return and risk after tax. So after tax rate of return and also risks. Then investors do not have to worry about ESG or greenness. And this will bring back to optimal portfolio allocation. Then if we want to implement these tax, it is very important. Digital technology is very important. University of Tokyo of Engineer, they can have every day the photo of Japan. Then they can measure how much CO2 is exposed from each company, even from households. And this will tell us exact measure of the exposure of CO2 and other gases from the company. This is allow that charges of the tax to many companies. And another proposal is globally the single green credit rating will be needed. As we have seen now, each credit rating agency give different scores, but we need unified single credit rating. Then the portfolio allocation will not be distorted. So this is another way to screen one company to another based on their exposures, and single credit rating should be provided. Same thing applied to green bond. Green bond, there are 10 different definitions issued by Europe. Then some of the companies, 80% green, 20% gray, they can issue green bond. 90% green, 10% gray. That project can also issue green bond. So even though the green bond is proposed, but each green bond is different because there is no unified credit rating for greenness. So the lastly, same thing applies to green bank. If the banks are lending money based on the greenness, again, some company are 90% green, 10% gray, that is called green. And another 80% green, 20% gray. So that will distort the optimal allocation of the finance. Lastly, green central bank is also proposed. Green central bank means traditionally they purchased ordinary government bond, and they are proposed to purchase green bond in addition to ordinary bond. Again, this green bond, there is no unified criteria. Then various kinds of green bond can be included here. then the central bank will also providing distorted portfolio allocation to the company. Lastly, it is often said ESG and stock performances are coexisting. And then if you invest in ESG, then your rate of return from the stocks will be very high. But based on 3 credit rating agencies, only one credit rating agency in this case shows the strong correlation between ESG score and stock price. But other cases, they do not relate each other. So in other words, ESG score and performance of the stock market does not necessarily coexist together. The main reason is ESG has some target to achieve by the company. Some of the companies are thinking 30% of their stock investment should be based on ESG. So when they are looking for the target, then they will invest into the company where ESG score is high. But once they achieve 30% of their stocks into ESG, then they will go back to ordinary risk and return profiles. So during the process until to achieve to the target of ESG objective, then ESG score and stock price will go together. But once it is achieved, it will not. So this will show ESG score and stock performances are not necessarily correlated to each other, except for one rating agency. And those are my presentation for today. Thank you very much for your invitation.
Thank you very much, Professor Yoshino, for your interesting presentation on ESG investments and portfolio allocation. So before we move to the first session, so let's take a photo of speakers, discussants, panelists. So would you please turn on your camera? So Dr. Peter, Dr. Sarwar, Dr. Asif, would you please turn on your camera? Dr. Asif, Dr. Sarwar, are you there? Okay, so let's take a photo. Ready? 1, 2, 3. Thank you very much. Okay, perfect. So let's start the first session. So the first session is on a prerequisite for facilitating green digital financing. So we are going to have 4 presentations in this session, which are talking about the legal and regulatory frameworks which are needed, and it's very important, and also how to assess the risk, role of government, and the final presentation is giving a big picture and the general overview of the green digital finance. So let me invite the first presenter, Professor Vijay Kumar Singh of UPES School of Law, India. So Professor Kumar, please.
Thank you, Professor Farhad, and distinguished delegates who are present at this particular conference. It gives me a pleasure to be part of this particular webinar, speaking upon a topic which is quite new and emerging. So many congratulations, Professor Farhad and team, for choosing this particular area to work upon. And I have seen the lineup of the chapters, and it is really interesting. I see my name to be in the chapter 1, and I believe that is what is the purport to begin with. So you have to give the introduction about the topic and talk about the regulatory and legal framework. So the title which I proposed was Regulatory and Legal Frameworks for Promoting Green Digital Finance to Achieve the SDGs. So I think that we can exclude this to achieve the SDGs because that will be part of the name of the book. So for this chapter, we can just keep Regulatory and Legal Framework for Promoting Green Digital Finance. Now, during the course of my study and research till now on this particular topic, I find that it is quite a difficult topic to research upon, because there are plenty of material available, but all these material are scattered around. So let us talk about how this content of this chapter will be arranged. So I propose these broad contents in the chapter. So there will be an introduction, which will provide a general understanding. And in the introduction chapter, basically, I'm dealing with the concept green, digital, and finance. So these are the three terms, three words which are used, right? So green is having a specific meaning when we talk about in the international context and sustainability. So that is one. And then finance is important because you require finance to achieve that particular goal, which has been recognized throughout the documents. Either you talk about the SDGs, or you talk about the UN goals, or you talk about COP21. All these talk about leveraging finance to achieve those particular goals, because without finance, those goals cannot be achieved. Either it is the climate finance or it is adaptation fund, whichever way you call it. So this will provide that background. And then ultimately it is digital finance. So when I had a discussion with Professor Farhad, he gave a guidance that, we already have done something on green finance, but it is more about focusing on digital finance. And now when we see the linkage and interlinkage between green finance and digital finance, there is not a very strong linkage which you find in the literature which is available at present, or at the regulatory space as well. However, UN inquiry document talks about green digital finance. There is an initiative along with Ant Financial that is called Sustainable Digital Finance Alliance. I think these are the initiatives which are happening, but there is nothing at a concrete level internationally. Either you can say a treaty or a document which comprehensively covers all these digital initiatives from the standpoint of green finance. So objective of this particular chapter would be to, find out those documents and come up with something which, aligns it towards a single document which covers all initiatives relating to green digital finance. So the second part of the chapter would cover the historical background and synergy with the UN agenda, and then financing of SDGs, and then concept of green digital finance as such. What does it mean, particularly arriving at a definition, and then regulation and policy framework. One thing which is quite interesting, and you will notice, is that in all the international documents, I'm referring specifically now to the UNDP co-chair on, Secretary General's Task Force on Digital Financing. It specifically highlights the development of a concrete digital revolution to harness the, SDG achievements. So this part will be also understood in this regulatory and policy framework chapter. And then it is important to also note about the major stakeholders, because there are major stakeholders who frame some policy in this regard, starting with UN EP, and then we have World Bank, IMF, and International Bank of Settlements. So all these have some policy framework. Just now, Professor Yoshino pointed out about green bonds, about stock exchanges. So they are all standalone initiatives at the national level, but how does it translate into an international level initiative is something which will be the objective and attempt of this particular chapter to look at. And at the end, there will be conclusions and suggestions. Now, if you look at the concept as such, so UN Environmental Inquiry talked about this sustainable finance. And if you see the bifurcation, it is quite interesting to note that environmental, social, and economic. And in the environmental, you can see there are initiatives relating to climate change mitigation, climate change adaptation, and other environmental. And majorly, when you talk about green finance, it is either we are talking about low carbon, or we are talking about climate, or we are talking about ESG. That is also a very, very important area from the private investment perspective. And there is indeed a challenge that how do you draw the metrics to measure that? That is an important challenge which we are facing. But green, when we talk about, it is overall the environmental initiatives or environmental initiatives for achieving SDGs, and how finance comes there, and ultimately how digital finance comes there. So this is what would be the overall objective or premise of this particular chapter. Now, in terms of the framework of understanding green digital finance, this is again adapted from Sustainable Digital Finance Alliance, as I pointed out before. It is, it starts with the bottom of the pyramid. That is, you are talking about systems and data for green financial decision making, and then you move forward. And ultimately, why we are talking about a strong framework? Because everybody has talked about a strong regulatory framework for achieving innovation for the SDGs. Particularly, if you want to have new sources of finance, then definitely there is a need to innovate into the financial system. And green finance is one of such innovations, and digital adds to it, but there should be some uniform regulatory structure, which is the premise or idea behind examining in this particular chapter. If you look at the SDGs, 17 SDGs, we can categorize them into different. The green SDGs, which I am talking about, it is all greenness, is 7, that is affordable clean energy, climate action, life on land, that is biodiversity conservation, life, though it is blue, 14 number goal, but again, it contributes to green. In fact, you will see that all these colors are different in your SDG 17 goals, but more or less everything converges towards green. So it is quite interesting to note that. So we will be focusing on these goals. And then there is a concept of green swan, which has come. So we are moving from black swan to green swan. And this is about risk mitigation. So the climate risk analysis, and there was a big conference organized recently by the International Bank of Settlements, and they termed it as green swan. And their digital green finance is their important factor or important agenda point for examination. So we will be talking about this green swan initiative, or maybe we'll talk about, because if you see from the legal and regulatory perspective, there are 3-4 points which are important. One is data, because everything revolves around data. So there should be data uniformity, some regulation there. Security of the data, that is also very important, because, and then ultimately, whether the finance meets the definition of greenness, because many a times, the finance starts with green, but may not retain that particular greenness throughout its investment period. So whether there is some regulation around it. So that will be also a subject of examination. Coming to the digital finance part of it. Now here the examination which we will try to do in this chapter will be on the enabling technologies, because here the regulation is required. Because if you talk about fintech activities, I believe there are national initiatives at the equity crowdfunding, digital services payment, these are all happening at the national level. But when we talk about situations of API, cloud computing, biometric, distributed ledger technology, artificial intelligence, machine learning, these are all requiring an international regulatory framework or laws kind of. Now, I just want to, as I told you, this market support services. Here, these are the areas on which this chapter will explore that what is the international framework, right? Whether there is a, say, for example, Bank of International Settlements, whether they have any document which they propose or is in existence in relation to the green finance, that will be examined. Similarly, with Internet of Things, artificial intelligence, distributed ledger technology. So this is what is the premise overall of this particular chapter. And I am open to suggestions and questions and any inputs, because this is at the formative stage. We are, the work is still going on. I think all inputs are welcome. Again, Professor Farhad, thank you for giving me this opportunity. This Global Green Finance Index recently released, ranks policy and regulatory framework as one of the major drivers. So that is about 8.20% is talking about policy and regulatory framework. That is why this chapter becomes important, and it is well placed at the beginning so that everybody has an understanding in what frame we are talking about on green digital finance. Thank you.
Thank you very much, Professor Vijay Kumar, for your interesting presentation and explaining about your chapter, which is very interesting. So I just shared the agenda and link to the biography of all speakers. So all of our panelists are distinguished and with very excellent background. So for saving the time, I'm not going to introduce them completely. So participants can refer to this link for reading about their background. So next presentation is by Dr. Peter Morgan of the Asian Development Bank Institute. The presentation is on assessing the risk associated with green digital finance and policies for coping with them. Dr. Morgan, please.
Thanks very much, Farhad. Can you hear me?
Yes.
Okay. Yes, so I'd like to thank Farhad for inviting me to participate in this very interesting project. We at ADBI have been involved in a number of projects on digital finance and on green finance, but this is the first time we've put them together into green digital finance. So my presentation is on assessing the risks associated with green digital finance and policies for coping with them. And obviously this chapter's content, I think, must link very closely with the previous chapter because regulation is essentially aimed at containing risks. But these are the subjects I will cover. Just a brief introduction on the modalities of digital green finance, and then talk about risks in various areas. First, big data and machine learning, artificial intelligence, environmental risks, fintech-related risks, cyber risks, and then administrative and regulatory frameworks to address those risks. And as Professor Singh mentioned, many of these issues are international, so that I think the role of regional and international cooperation is going to be quite important. So digital technologies can create new risks and unintended consequences, including for the environment, which can limit their potential to scale sustainable finance. This chapter discusses these risks and possible ways to contain them to achieve inclusive and sustainable growth. And the major risks include the ones I mentioned, also the Internet of Things, blockchain, and crypto assets, in addition to the ones in the previous outline. So I think there are two broad ways that digital technology can affect green finance. One is in terms of green project monitoring. So this would include use of big data, machine learning, artificial intelligence, and the Internet of Things, just to be able to perhaps provide more transparency on the greenness of projects and to ensure that they are meeting their expectations. And then there's the finance side. So you have blockchain, distributed ledger technology, or DLT, digital finance platforms such as peer-to-peer lending or equity-based crowdfunding, and also a paytech, payment-related services that can influence green finance. So in terms of the big data, MLI and IoT risks, obviously, given the vast amounts of data which are being generated, concerns are rising about the safety, fairness, and trustworthiness of artificial intelligence, bias in algorithms that make it increasingly important decisions affecting people's livelihoods, including access to finance, could have serious negative consequences and increase exclusion, for example. And so as the technology becomes more sophisticated, rooting out these biases becomes more difficult. And also technologies such as IoT are still in the proof of concept stage. So I think the policy response is to develop transparency standards for making AI less inscrutable, more transparent, and certainly to promote standards for IoT as well. In terms of environmental risks, digital technologies do have environmental effects through hardware and software production, use, and termination. High energy consumption is of particular concern. For example, it's been estimated that global data centers have a carbon footprint equal to, if not greater than, the airline industry. Also, blockchain's energy footprint is large. It's estimated that the energy consumption for Bitcoin mining is about double that of Scotland. And so the response there has been suggested to develop green electronics procurement systems, e-waste regulations and management systems, but also develop less energy-intensive procedures for verifying a DLT type of transactions. Then blockchain, crypto asset, fintech-related risks. Technologies such as blockchain are still also, I think, at the proof of concept stage. High and escalating costs of reaching consensus in Bitcoin networks are a barrier for adoption. There's a lack of standards to ensure interoperability between systems, which limits the adoption of new technologies. The combination of sustainable finance with digital finance does create gaps in understanding. As Professor Singh mentioned, these are two areas which have not been joined together that much yet, and business models and markets are new, and there is still uncertainty as to what works and what does not. There are various other consequences. For example, some unintended consequences might result in over-indebtedness and financially illiterate clients. Widespread adoption of crypto assets for general transaction purposes is constrained by various factors such as price volatility, transaction anonymity, AML, CFT issues, and lack of scalability, and regulatory issues around crypto asset platforms, illicit financial flows, and possible tax evasion. So I think that there is a need for development of regulatory frameworks in these areas, which are still very disparate and uncoordinated. International cooperation is strong and needed, and the Financial Stability Board, for example, has published a framework for monitoring the risks to financial stability from crypto assets. And there's specific risks on peer-to-peer lending. For example, there are problematic incentives for platforms to originate loans and credit ratings without holding the risk of those loans. There's fraudulent behavior. Platforms could be vulnerable to maturity mismatch. There are contagion risks. Fintech platforms could show larger swings in the sentiment than traditional intermediation of funds, and lending activity outside the prudential net may limit the effectiveness of macroprudential policy measures. Cyber risks, the BIS actually cites cyber risk as perhaps the biggest threat to financial stability, at least in the short term. This susceptibility of financial activity to cyber attacks is likely to increase as more systems and different institutions are connected. The number of cyber-related threats, such as hacking, ransomware, which we've heard about a lot recently, challenges in protecting sensitive consumer and corporate financial data. So in response, data breaches are creating growing calls for greater digital and data protection, and more consumer education needs to be required to invest in safer software systems. So what are the frameworks to address these risks? The policy objectives pursued by national authorities related to fintech so far have mostly focused on consumer and investor protection, market integrity, financial inclusion, and the promotion of innovation, but not on financial stability. And the rapid pace of innovation in fintech and its multifaceted aspects pose particular challenges for regulation. There's a need to balance requirements for financial stability against those for innovation and financial inclusion. And there's a need to square with competing demands for regulation for consumer investor protection, cybersecurity, data protection, et cetera. And I think also, and very importantly, there's a need to develop programs for digital education and digital financial education. International cooperation, the number areas where this can take place: payment and security settlement systems, managing operational risks from third-party service providers, mitigating cyber risks, anti-money laundering and countering the financing of terrorism, cross-border legal issues and regulatory arrangements, governance and disclosure frameworks, supervisory coordination and information sharing, and sharing of information on supervisory and regulatory best practices. And there's a need to revise or develop international standards by the standard boards. So in conclusion, risks are concentrated in the following areas: big data, MLI, IoT, environmental risks, blockchain, crypto asset, fintech, and cyber risks. And these risks need to be addressed by improvements in both regulatory frameworks and consumer protection frameworks. And there's a need to balance the requirements for financial stability against the benefits of innovation and financial inclusion. And I think very importantly, digital education and digital financial education are also needed. And finally, there are many fruitful areas for international cooperation. So let me stop there. Thanks very much.
Thank you very much, Peter, for your interesting and informative presentation. So I'm sure that it's going to be one of the most interesting chapters in this book on how to cope with the risk. Thank you very much. So the next presentation is by Dr. Yener Coşkan of Capital Market Board of Turkey and TED University in Turkey. So the presentation is on role of governments in enhancing green digital finance for meeting the SDGs. So Dr. Yener, please.
Thank you very much, Farhad, and thank you for having me here. That's a very nice webinar. And as you indicated, my chapter is about role of government in enhancing green digital finance for meeting SDGs. That's the usual disclosure. Let's keep who I am. And okay, so that's the content of this presentation. Let me give you a little bit insight about some conceptualization and discuss digital finance and fintech and why we need the greening in finance and digital finance and what kind of challenges in green finance and digital finance. Those are already had some discussion with the presenters, and how regulators may respond to these challenges, and what is our initial policy suggestion. This is an ongoing research, and we have some initial policy suggestion. So digital finance involves some digital infrastructure, including mobile and internet, with low use of cash and traditional bank branches. It may work through fintech companies and innovative financial service providers. And there are some pros and cons in this fintech. So many people expect that this fintech initiatives may minimize information asymmetries, improve private discovery in financial markets, improve financial inclusion, and finally, it may contribute financial market efficiency. It seems some high hopes for fintech. There are also some cons already discussed by Peter Morgan. The main problem of fintech and digital finance would be related to some distortions on financial services. Basically, it may create more and more distortions through interconnectedness on the high level of interdependencies. So there are some risks in digital existing applications on digital finance and fintech. So this is one of the reasons why we need I think there is a voice out there. That's why we need some regulatory action to digital financing. So How can we define this fintech and digital finance? Actually, there is no common understanding according to literature, but there are some suggestions involving the latest technologies on finance, like big data, machine learning, and artificial intelligence. There are some driving forces, as we all know. The point is that there is a growing adoption rate of digital finance applications and fintech services. For example, according to Green Digital Finance Foundation, in Germany, for example, 64% of the digital active consumers use fintech. China and India, perhaps two leading countries having high adoption rate of fintech services with a 87 adoption ratio. So it seems that there is a growing possible implication of these fintech services. So how can one understand green finance? It seems that it is related to the financing of investments that provide environmental benefits. Professor Yoshino already discussed green bond, green banking. We can use more terms related to these issues like green securities or stock market or green insurance. So it means that all traditional services maybe work through some environmental concerns through green finance framework. So it seems that green digital finance is related to some intended applications of digital finance or fintech to achieve the goals of CDG. So in a broader context, this concept, GDF, would be related to CSR, corporate social responsibility, and ECG. There, as you all know, there was ongoing studies on ECG and CSR in the last 2 decades. We have high level of scientific knowledge on this issue. So the point is that does fintech has a potential to unlock green finance? It's probably one of the critical questions that we seek answer. According to some in the literature, we can say yes. However, there are some counter arguments in this issue as well. So appropriate policy and regulation, it may work. We can say that. Necessary, for example, underlines that fintech and specifically blockchain may contribute in implementation of sustainable development goals if supported by appropriate policy and regulation. So let me tell you, as a expert at a financial regulatory body since 1995, if we can establish an optimal level of regulation on this issue, we can simply develop some better framework for the development of green digital finance. Also, necessarily discussed potential use cases of fintech for sustainable development goals. For example, he indicated that supply chain transparency, identity, and financial inclusion and property rights would be the examples of to adopt the fintech for CDGs. Moreover, blockchain and related technologies have important early use cases in the energy sector. As we all know that cryptocurrencies consume more and more energy, and we ask whether is it right place to start go green thing. So it seems that there are many different places to adopt this technology. So again, there are high hopes for digital finance for the consumption growth and stability perspective. Some researchers expect that it may help to decline transaction costs and may increase financial inclusion. As we all know that finance and growth literature suggests some benefits on this issue. However, all these benefits and greening may depend on some both industry and regulatory initiative. So we can ask whether digital finance contributes the Paris climate rules and sustainable development goals. According to literature, technological innovations in sustainable finance doesn't contribute enough to sustainable growth policies. So that's the main problem that we try to address here. So whether we say that, we argue that whether green digital finance is a more reliable alternative to achieve sustainability goals in a global scales, that's the main problem. But there is some problems in this relation because limited application and limited positive impacts between these two concepts because of the disconnections between digital finance and sustainable finance. And also there are some inherent risks and some unintended consequences of digital technologies. So the risk thing and also this connection seem two big problems between digital finance and sustainable finance relationships. So this picture requires to develop the greening digital finance with the aim of developing tailor-made digital finance products for multi-level sustainable decision-making in finance. However, it seems that the level of greenness is not enough.
Yeah, so 1 minute remain.
Okay, it seems that the level is not enough. And for example, only 5 to 10% of bank loans are green in few countries. We can talk about how low of the total green bond issues, or how low the total securities green securities holding. So it seems that the market is less developed, and we can ask why. This will be connected to also the lack of optimal regulation in this area. There are some problems in digital finance and green digital finance, like lack of mobile phone or digital devices, lack of internet connectivity from the global perspective. People may not ready to use it. Lack of digital trust, digital risk, lack of policy and regulation. These are all related to the problems in digital finance and hence green digital finance. So let me skip this stuff and focus on the problems of green digital finance in a broader perspective. So lack of sufficient awareness would be critical. So also this is a critical point in global rulemaking, and inadequate infrastructure is also important for the successful adoption of GDF. So policymakers should follow more closely in different points. For example, strengthening green finance for low carbon, climate resilient investment, and achieving sustainable development goals. COVID-19 period might be a chance because of the global rising engagements in corporate environmentalism and ESG investing. That would be a chance. So how regulators may respond to these challenges? There are many critical issues to address by the regulators, like better risk management, disclosure standards, development of green taxonomies, or developing some standard rating stuff, as indicated before. 3 key elements of sustainable digital finance ecosystems. We can say that digital and data infrastructure, policy and regulatory guidance, and applications that unlock financing for SDGs at national level. So this suggests that the rulemakers and both local and global level have some work to do. So there are some initial suggestions for successful implementation of GDF. For example, rulemakers may focus on to develop GDF-sensitive firm system-wide risk management systems. They can use or push to use market discipline tools more efficiently. For example, some voluntary or forcefully disclosure for ESG to improve green digital finance literacy. So this would be also critical. It seems that this is very interesting to address. To improve awareness of all green stuff would be important. To improve international cooperation, as indicated before. To develop supervisory and open source data management, because data is a big problem in full application of GDF, and to develop sector level guidances. This is also important because it seems that there are many private initiatives out there, and they're, for example, from rating perspective, their rules are not fit, and we are confused about the pricing and to understand the level of the greenness in many products. So thank you very much for listening me. I hope the time is okay. Farhad?
Thank you very much, Dr. Yener. The presentation is interesting, and thank you for your contribution to this book and also for presenting. So next presentation, the last presentation of this session is by Nestan Davidze. So her presentation is on the current state of green digital financing and associated challenges in funding the SDGs. So after this presentation, we are going to have a discussion. Professor Yoshino will discuss these presentations in this session, and after that we will have a few minutes for Q&A. So for the participants, you can use the chat box or the Q&A function for writing your question. So let me have the slides. Okay. Yes, Nestan, please.
Thank you, Farhad. Thank you. So my presentation today will be about the current state of green digital financing and associated challenges in funding the SDGs, but this presentation mainly focuses on challenges with green digital financing. Next slide, please. I'll start with an overview of recent development in green digital financing and what's going on the market now. So what can be observed is an increasing use of big data, machine learning, and artificial intelligence, which enables the aggregation and analysis of the data, which can be increasingly complex and coming from many different sources. And this is particularly important in the credit analysis process. Also, we can see mobile money used for easy payments with or without banking accounts. We can see a lot of peer-to-peer lending platforms and crowdfunding platforms for debt or equity as a new source of capital for the borrowers. There are blockchain technologies and shared database of transactions, which are we can also see increasing use in financing, especially in green products, and several other innovative approaches deployed by fintech or energy startups. But these instruments are not implemented at scale across geographies now, which still leaves a huge gap in green financing. Can we move to next slide, please? Why is digitization so crucial, especially in green financing? Digitization is generally very important in any sort of financing, but why especially for green financing? Still, green products are considered very risky by financial institutions, and this results in higher pricing and high collateral requirements for the borrowers. Because also the technologies are new, there are no market developed for these technologies. Therefore, financial institutions are reluctant to accept those as collateral. And all of this together makes products unaffordable for the borrowers, which has several negative consequences. First, there's an environmental effect because borrowers remain with technologies which are not coming from clean sources. or are damaging to the environment. Also, it affects their livelihoods because these traditional technologies and sources are more expensive normally. And without the financing of the new technologies, the resilience of the borrowers to climate vulnerabilities remains weak. So that's why digitization could result in lower cost of debt and increase the outreach. Because like we can see in a lot of cases with like financial institutions that they don't serve like remote borrowers because the cost of reaching them is really high. This is exactly what digitization could address. And consequently, it could result in improved credit profiles and then improved flow of private investments, which would finally result in scaling green and sustainable practices and overall increase in financial inclusion. And digitalization can be used in various stages of credit underwriting and management, which are determining need for, let's stay with the same slide, please. The previous, yes. So it can be used in determining the need for financing and sourcing the borrowers. Also, as we already mentioned, with effective and low-cost credit analysis and impact assessment, because it enables the deployment of like large source of data, and finally, low-cost delivery channels. Next slide, please. And here is the overview of the challenges associated with green digital financing. First of all, a high risk of lending, resulting in high cost of debt and limited private investments. But this is the case not only with green digital financing, but with all the green products, green lending products. And also there is lack of integration between the stakeholders, which I see as the biggest challenge. As of now, sustainable finance and development communities are largely separated from digital technology players. And similarly, policymakers and the regulators tend to treat sustainable finance and digital technologies as distinct areas, which results in separate government plans to promote sustainable finance and, on the other hand, digital finance or fintech. And this creates missed opportunities for digitally enabled co-benefits between financial institutions and sustainable finance. In case of fintech companies, the presence in the legal lending markets and limited experience in credit analysis can be a problem. And on the other hand, with traditional lending institutions, weak digital infrastructure and high technology costs can be the issues. Another very important challenge is limited sustainability related data. Because sustainable finance decisions require large data, which is currently available on a limited scale. Even where data sets may be available, it is hard to adopt this for digital lenders. And the another challenge is lack of commonly accepted and transparent assessment tools. There are some tools, like it was already mentioned on these sessions, like Green Index, although it is mostly accepted by like microfinance institutions and some sort of financial institutions and not digital service providers. And the last and probably one of the biggest challenge is standards and regulations. This is what Dr. Peter already touched based on, that several technologies underlying digital finance are still nascent, and scaling such technologies in the future will require new standards and regulations. This is mostly it, for my presentation. We will focus and expand this more in the paper. Thank you very much for listening.
Thank you very much, Nestan, for this interesting presentation and the chapter, which is going to provide the big picture and overview of the current state of green digital financing. Thank you very much. So next, I would like to invite Professor Yoshino for kindly discussing these 4 presentations and providing comments on them.
Thank you very much all for presentations. I would like to give very common comments to all the papers first. Then I would like to talk about some specific topics. First one is, in my speech, I was discussing about definition of greenness. It is not unique. Some of the green bond, 80% green, 20% gray, that can be called green bond. 90% green, 10% gray, that can be called green bond, as long as they can satisfy one of the component of the green definition. So I think what would be the best way to make unified greenness index? And there is no credit rating which is based on the clearly the exposure of CO2, plastic, and so on. So there are lots of green bond has been issued as if they are purely green. So that will distort optimal portfolio allocation. So that is my first question to all of you. How would it be possible to have unified credit rating on greenness? And currently, my own view is rating agencies are making profits because they are providing different definitions to different investors. So Japanese investors pay huge amount of money to various rating agencies to asking how should they change their portfolio based on greenness. Then each rating agency provide different definition, and then they pay enormous money and they change their portfolio allocation. So that is my own view. And any of you would have any good idea how to make unified credit rating. So I think international organization should have the role, like a World Bank or ADB or whatever, and they could have a unified credit rating. And also, I think modern technology has to capture how much CO2, NOx, has been exposed. And as I mentioned, university engineers at the University of Tokyo can capture by looking at the temperature changes of each company by satellite photo. And they can estimate the exposure of CO2 and various exhaustion gases. So I think the modern technology and also those kind of technology may be important. So that is my very general questions to all of the presentations. And second one is Peter Morgan was talking about cyber risks are very important. And I think many countries, many companies spend so much amount of money to guard against cyber attack. But attackers are not well regulated. So in other words, some of the attacks may come from North Korea. And then international organization cannot do anything about it. So I think that there must be some international activities which those criminals should be arrested and stop it. Otherwise, cyber risks will remain forever. So I would like to ask Peter, what kind of actions should be taken globally? Because many companies spend huge amount of money, and these kind of cyber attack cannot be protected. And last one is unified credit rating, or in my view, the global taxation on GHG will be the 2 ways to make a good portfolio allocation. So any of your comments with taxation globally, same tax rate would be possible to make it a good greenness targets? Or do you have any kind of proposal what we could do? So those are my comments. All the presentations are very good, and thank you very much.
Thank you very much, Professor Yoshino, for your comment and for the question that you raised. So If presenters wants to answer to this comment and question, you are welcomed.
May I say something?
Yes,
First, thank you very much, Professor Yoshino. Maybe to develop a uniform rating for the ECG rating, for example, what can we do, you ask? Maybe IASCO may develop a kind of initiative to develop a common framework for the rating agencies, but this is a kind of principle-based thing, and I'm not sure whether this would be very effective on the rating agency. They are very big and strong companies, as you all know, and it is hard to develop a joint framework by using a just principle-based approach for this issue. The regulation, a global rulemaking would be another issue, but I'm not sure whether it works globally. Maybe G20 may do something, but if the US do care about this issue and attempt to develop a kind of regulation for the leading rating agencies for this uniformity, maybe we can a kind of solution. That's my point of view about the issue.
Thank you very much. So, Professor Kumar, do you want to add?
Yeah, thank you, Professor Yoshino, for that particular input. Actually, I'm taking home this credit rating thing because that needs to be analyzed and seen whether there is something around this internationally. Because in the national framework also, there are different credit rating agencies and there have always been questions. And I examined this from the perspective of corporate frauds, where you find that a rating agency has rated a company with A+, and then suddenly you find that the financial books are having trouble and problem. So that is something which is going at the root of it, but whether there is some international document or internationally this has been discussed will be worth examining. And thank you for that input. Maybe I'll be including it in one of my sections, which I'm talking about different agencies. There, maybe that will be included. As far as global taxation regime is concerned, I believe this particular agenda got discussed at WTO in a way, but similarly competitiveness, if you are aware. So these were the things which could not muster at the international level, because these are quite complicated matters, because when you talk about taxation, in fact, we were not able to come at a conclusion on subsidies also. If you will look at a lot of subsidies, because these are all interlinked. So if we are talking about greenness, if we are talking about sustainable agriculture or sustainable finance, all these things are interlinked, and subsidies are also part of it. Because if you are giving a lot of subsidy, I'll give you one example. There is a lot subsidy given to the farmers in our country, right? On water. Now, say, for example, if you give free electricity and free water to a person, there is a natural misuse which is going to happen because they don't have to incur any money out of it, right? So can there be a policy to the sovereign countries saying that you cannot give subsidies, or you cannot have restriction, or you should have some restriction, some mechanism to stop this pilferage of electricity and water? So definitely that is a good question, but at the international forum, probably taxation regulation, I am doubtful, but this can be examined definitely. Always ideas begin with this doubtfulness, and then subsequently we come up with at a conclusion maybe a policy. So thank you for that comment.
Thank you very much, Professor Kumar. Peter, please.
Yes, thanks very much for the comment on cyber risk. I agree it is an international issue. Unfortunately, I think given the current global political situation, I doubt that it's going to be practical to be able to arrest cyber criminals in certain areas such as North Korea. So that I think the emphasis has to be still more on defense. That is enforcement of high standards for security of data systems.
Okay, thank you.
That's all, thanks.
Thank you very much, Peter. So Nestan, do you want to add any comment or answer to the question that Professor Yoshino mentioned?
Not any comments, but thank you for very useful comments from because I would also try to research this more, especially with the differences in rating and how it can be addressed to have one unified rating system. Thank you.
Thank you very much. If there is any question from the panelists or from the participants, we have a few more minutes left in this session. Is there any question? So, Dr. Song, you want to ask a question? Dr. Song, do you have a question? Okay, so if there is no question, so I think we can. Is there any question? So there is one question from Mr. or Miss Blessing Amos Atakli, asking to all panelists if they want to answer. I want to know how we can get data on green finance and how green finance can be measured. Is there any answer to this question? So regarding the data, I can answer that accessing green finance data is not easy. So there are some indicators, several studies in the literature, they introduced indicators. For example, in one of my recent publications in finance research letters, we introduced a green finance indicator index based on different indicators. So we measured it. So we don't have a general or international standard that shows this is the level of green finance. So there are several studies, especially most recently in the literature, that they introduced green finance index or sustainability index or ESG finance index that you can refer to it, or I can share some of these papers with you here. And so is there any answer to this question by the panelists, if any? Okay, so is there any other question? So let's see. So if there is no more question, let's wrap up this session, and we are going to have about 10 minutes break, and we will come back at 5:30 Japan time. So it will be 12 minutes break now.
I can ask a question.
So you want to, sure, please ask your question.
Yes, so yeah, most people are just from the Asia, and there's a professor who are the doctors. So I'm very curious. So Asia countries, especially, they are lack of the big data, but they emphasize the green digital finance. So also the IT technology also is far below, far behind the developed country compared to EU or the United States. So I know that the big data is how important it is in post-internet, the financial revolution. It's in IoT or AI. So how can we, especially Japan, maybe accept maybe about this in our countries, but including Korea or other countries, how can it follow the digital finance technology, and so how can we develop the kind of the high tech, the IT, the technology, such as the United States or EU or Japan. So it's a big problem. Also, we are our IT system is also vulnerable to the hackers, as you said. It's very dangerous. You can lose all data, or it's maybe the data system maybe stopped you at one time. So how can we cope with that kind of the uncertainty or the potential risk? Yeah.
I see. Thank you very much for your question. And yes, this is an important point that you raised. So you're asking this question from whom? Is it a general question? So I think we had one presentation on risks by Dr. Peter Morgan. So he mentioned about different risks in his presentation, and in this chapter he's going to identify different risks which are associated with green digital finance and providing some remedies on how to cope with them. But the risk that you have mentioned are also important. Risk of cybersecurity, big data, and so on. These are also important risks that need to be addressed. So is there any one from panelists who wants to answer to this question? Good. So if there is no more comment or questions, so let's stop this session and wrap up this session, and we will come back within 9 minutes, 5:30 Japan and Korea Standard Time. So see you soon.
Thank you.
Thanks, Farhad.
So welcome back. Thank you very much for coming back and for joining this webinar. Let me start the second session. The second session is on the recent progress in green digital finance in Asia and Europe. We are going to have 4 presentations in this session, which are discussing the current status and the challenges of green digital finance in different countries, including Korea, in ASEAN region, in China, and the Belt and Road Initiative region. And also we will have a study from Europe on Finland. So let me invite the first distinguished speaker of this session, Dr. Yu-Shin Zhang of Fintech Center, Korea, for presenting his chapter on current status and challenges of green digital finance in Korea. Dr. Yu, please.
Hi, everybody.
Hello.
Okay. Can you see the screen?
Yes, it's clear.
Okay, thank you. I'm Yu-Shin Zhang. I'm working in Dr. Farad introduced me, working in Fintech Center Korea. At the same time, I'm a professor of Tokai University.
Just Dr. Yu, would you please speak a little bit louder? Your mic, a little bit louder. Thank you.
이거 조정할 수 없어?
It is good. Just a
Can
little.
you hear me?
Yes, we can hear you. Just a little.
Okay.
Thank you.
I'm working in a Korea Center, Fintech Center Korea. At the same time, I'm working in Tokai University as a professor. In Korea, despite of several discussions of green finance in the past, Korea is a little bit late compared with global leaders in green industry because of unclearness of the green industry itself and the lack of incentives for green finance. However, after COVID-19, as the role of digital finance in the green sector has emerged in Korea, particularly from last year, discussion about green digital finance is becoming a hot issue in Korea. Its background are, first, in July last year, as President Moon declared the Korean New Deal project, which includes Green New Deal and Digital New Deal. and the need for active financial support for green industries and linkage of Green New Deal and Digital New Deal has been emphasized. In other words, which means that green industries, including green finance, can only be effective when they are connected digitally. And also, secondly, following the 2050 carbon neutral declaration, the role of finance to support the low carbon industry becoming more and more important in Korea. And also, after COVID, digital finance, so-called Fintech, is getting faster and fused with big data, IoT, and AI, and therefore the role of digital finance related to the environment, where particularly IoT is very, very important, is also increasing in Korea. As a result, the detailed working group formed under Financial Service Commission, FSC Korea, and the Ministry of Environment and its roles to evaluate and manage climate risk, promote green investment, and improve corporate disclosure. Korean green finance includes ESG bond, focusing on environment, ESG ETF, green card, and ESG loan and saving. First, the issuance of ESG bond by banks and credit card companies has been $6.5 billion up to now. Second, environment-friendly green cards, which give reserved points, and environment-friendly loans and savings, and ESG ETF, there is totally 11 ETFs listed, and its amount is $592 million up to now. Particularly this year, initiative in 2021 has started with P4G last May. P4G, I think you understand, everybody, is a global consultative body launched in September 2017, led by Denmark and Korea, and was held first time in Copenhagen and second time in Seoul last May, whose theme is inclusive green recovery towards carbon neutrality. This conference re-examined the importance of finance in the process of responding to climate change and contributed to attracting interest and participation from the Korea financial sector to green finance. As Korean policies following P4G, there are several emphasizing roles. First, the role of the public sector has been emphasizing. Number one, Korean government has a plan to apply the financial regulatory sandbox to green digital finance so that they can contribute to boost up green industry and the green startups. Number two, green finance organization establishment January this year for each policy financial institution. Number three, set up Green Financial Council establishment among policy financial institutions last May. Its organizer is the Financial Services Commission Korea, and it will be held every quarter of a year. And its role is to promote collaboration between related ministries to realize specific results. Second, activation of green finance in the private sector. Number one, April this year, following the disclosure of EU taxonomy, Korea is preparing a green classification system that separates green and non-green activities through a process of collecting expert opinions. Number two, in order to foster a self-sustaining green ecosystem in the finance sector, it is planned to prepare the best standards for green finance. And so detailed pilot projects about green bond issuance are supposed to start probably, I think, second half of this year. So infrastructure for green finance. There are three key components Korea government FSK is preparing. Feature number one, step-by-step mandatory disclosure of environmental information for companies. Number two, review of stewardship code revision. Number three, building an information sharing platform. Final prospects for green digital finance. ESG bond in Korea has been issued $36 billion as of August last year, and expected to increase more than 20% to 2030 annually in the market. ESG ETF also has increased very quickly. As of June this year, it has amounted to nearly $600 million. Also, I think one of the important infrastructures is the carbon emission trading market. In Korea, it has opened in 2015, and according to its development schedule, the last third plan will start in coming July this year. And head of KRX, Korea Stock Exchange, Son Byung-do, said they will introduce carbon emission trading futures sooner or later. However, in spite of speedy efforts from government side and private sector, I think there are still some hurdles. First, there is a less eco-friendly product or business chances in Korea that can be invested. Second, I think particularly green sector or green finance sector, early detection and early resolution in green industry is very, very important. So the use of real-time based digital finance and digital vehicle like IoT devices are very necessary. Problem is that in reality is very limited up to now. But as I mentioned earlier, digital finance, so-called Fintech in Korea, which is in development stage, where data and key technologies like ABCDI, AI, blockchain, cloud computing, big data, and IoT converge each other very quickly. So we expect green finance will quickly start to connect it with the digital. In conclusion, the Korea, the green digital finance, still I think the green finance we are studying, but is mingled. Digital is a little bit late compared with global leaders, but I think I expect we'll catch up very quickly. Thank you.
Thank you very much, Dr. Yu, for the interesting presentation. Yes, definitely, Korea is among the leading countries in the field of sustainable development and green finance. And I think this chapter would be very interesting in order to provide lessons from the Korean experience to other countries, especially to other developing countries. So next presentation is by Dr. Darish David of SIM Global Education, Singapore. So this presentation and chapter is on recent progress in green digital finance in the ASEAN region. Dr. Darish, please.
Hi, thank you, Dr. Fahad. You can hear me, right?
Yes, clearly.
Okay, great, thanks. Yeah, so just to continue with Professor Zhang's presentation, the last part that you touched upon. We actually dive deeper into it, the carbon emissions trading, but here we have a more focus. So although the title is about Southeast Asia green digital finance, but we have identified something quite interesting that's taking place in the region, and how that could the literature there is kind of lacking, so there's a gap. So we thought that we could address that in our chapter. So here we're looking at fintech ecosystem to advancing financing for carbon offset markets and conservation in ASEAN, and we're looking at the barriers and opportunities. I hope you can see. So just to quickly run you through, this is quite a dense slide, so I just want to run through the main points here. So here we're looking at, as countries and companies, or the larger companies, actually have announced net zero targets, right? So in terms of their carbon that they emit, they want to cover up, and many of them want to be neutral. There are even companies in the West and in the US that want to become carbon negative. So they actually, they capture more carbon than they emit. So with that kind of mindset, I think we are approaching this topic. Obviously for CCUs, which are, say, more technology based, like solar geoengineering or storage technologies, they're still quite expensive and they're still in development. So it's quite difficult for them to access them, and they're also unscalable. So the natural fit would be looking at simple thing as planting trees, or natural climate solutions that remove CO2 from thin air, which is easier, and it's also done through mainly protecting existing forests and things like that. So I'll get into the details there. But essentially just looking at natural capital. So that's one of the keywords in our topic. So doubling the amount of conserved land and national waters is one of the requirements or targets that a study by McKinsey has come up with, to reach a kind of 2.66 gigaton carbon capture. And this will actually cost anywhere between 20 to 45 billion. But just to let you know that the market itself it should reach about $100 billion in 2030. So it's a huge potential, both as a market, but also in terms of solutions and providing jobs and things like that. So ways to develop the market and monetize such nature-based solution and asset for carbon sequestration is the key here. There's a lot of fintech itself required. So this would, the challenges are synchronizing between national regulation, contracts, payments, and geo-tracking these assets, because many of them need satellite technology. And then we provide, so this will also provide carbon pricing policy, improve on carbon taxes, emission trading systems, offset mechanisms, and a rules-based climate finance system. So this is valued at $100 billion, as I mentioned. So why is this important for fintechs and say green digital finance? I think this is kind of at the bleeding edge in a sense, because the UNEP inquiry published Fintech and Sustainable Development Report, which outlined what fintechs can do to support the SDGs here. Green fintechs will provide solutions to ESG-related challenges. So here, Digital Finance Alliance is outlines some of these concepts here. So we will look into these concepts in terms of how they will be addressing this. Obviously, also just to add one last point is that SDGs themselves, in terms of biodiversity conservation and things, and the environment, this will directly address them. So it's quite different from, say, the green finance that we look at when we look at, say, bonds or loans, green loans. Okay, so in terms of nature-based solutions, just to give you a quick definition, it's the ability to protect, sustainable, manage, and restore natural modified ecosystems. So essentially, it's just looking at whatever ecosystems or forest or whatever it is that exist in nature that are naturally, can sequester carbon. So it's just basically trying to protect them, or also give them, or also do reforestation or restoration of natural habitats. So this also includes, apart from forest, includes blue capital. So it's kind of like mangrove, seagrass, and peatlands, which are also on coastal areas. And this there's a lot of this within ASEAN. So that's the key focus here. We'll also have So most of the sequestration that's been happening so far, with UNFCCC and the earlier systems that existed through RED, are mostly through forestry and land use. So the volume is about in terms of 50 metric ton in terms of capture, and then also in terms of value, it's about $171 million. This still is double that of renewable energy. So you can imagine the kind of potential that it has in terms of carbon sequestration. So the potential impact of NBS carbon in ASEAN. ASEAN happens to be one of the largest in the region in terms of being having these kind of the natural capital. So it helps in providing this natural asset to actually to offset to make it a part of the natural offset market. And ASEAN actually contains about 35.6% of the world's mangroves as well, and the forest carbon's estimated annual net present value is about 9.8 billion. It's still less than the US, the Americas, but still quite large, or say about half of that when it compares to the potential. So NBS carbon market solutions also provide biodiversity benefits, because when you protect some of these pristine forests, so they have not been touched. So if you protect them, they're a natural sink, but they also you also have the added co-benefit of capture protecting biodiversity. So ASEAN also contains like 51 of the most of the 73 mangrove in terms of diversity. So it's a lot of potential to capture that. So there are a lot of barriers to carbon development in ASEAN. So one is the price itself. So if there's 1 hectare of land, right? So it needs to be profitable to of forest land to preserve for carbon sequestration, vis-a-vis, say, maybe having a rubber plantation or a palm oil plantation, which are the most popular, agricultural kind of exports from ASEAN. So other crop products as well. So the traditional ones, and also illegal logging. So these are all. So the cost, in a sense, has to be higher than this to be able to make sure that these are viable. So I think that's one of the major challenges with the mangroves, for example, or the blue kind of nature of carbon assets. There's aquaculture, the challenge of aquaculture, where the same space can be used for fish production or something else of similar sorts. So there's a lack of carbon market. So that's been the challenge. So that's I think is what's coming up as a big issue now, and there's a lot of interest and a lot of companies and governments and other stakeholders that are slowly getting into this. So what we are looking at is one case study, which is similar to the one here mentioned, the carbon trade exchange in London. So there are also technical barriers, so lack of human resources, insufficient data. As we know that just calculating one hectare of carbon capture in one country with certain forest cover or certain different cover, it depends on the land itself, right? The capture will be different. So capturing all that and being able to monetize that will be quite a big. It requires a lot of data and a lot of IoT, for example. So how companies measure, set targets will also be hard. Scalable technologies and accepted frameworks are also still in the works. Lack of regulatory infrastructure and regional corporations are also the major challenges. Just to, due to the lack of time, I just want to quickly run through this. So in terms of the ability, this is the kind of resources that are there. So Indonesia has the most in terms of forest, while it also has a huge, there's been a lot of forest cover being lost in the last few years. Last 20 years actually. So Indonesia has the greatest potential there, and next is Malaysia, and the net present value is in the second column. So you can obviously look at my slides later, so I'll just quickly run through. So the blue carbon potential is also huge in ASEAN. There are huge challenges with regards to blue carbon potential in ASEAN. So one thing is measurement itself of it's still kind of behind what's there in say forest or the green carbon potential. So although there's a huge potential here, Myanmar, for example, Indonesia again here leads, but even other countries like Myanmar have a lot of potential to monetize their pristine, say, mangroves or seagrass. So this is just a quick snapshot of data that exists. Oops. And so this is something that we wanted to cover in our chapter. So what's really been interesting is the nature-based carbon market in Southeast Asia, which is kind of pioneered in Singapore. So it's just been announced recently, in fact, just last month. So this is going to be, as Singapore wants to be a sustainable finance hub, this is a joint venture between the DBS, which is one of the largest banks, and the Singapore Stock Exchange, and Standard Chartered and Temasek, which is a large investment bank. So they want to create a world-class carbon exchange. It's called Climate Impact X, and this is also based on global standards. It's called Gold Standards, which is also the basis for other carbon markets that exist in the US, for example. So there's already a lot of interest here, and it's going to take some time before it starts pulling through. But if you ask me the question, like, where are they going to monetize, which are the nature-based solutions that they're going to monetize, is mostly in the region. So Singapore doesn't really have all that land and all that forest cover, for example. So most of it will be coming out from the region. So they need to establish, these contracts and things like that. So which is one of the bigger challenges. Just to quickly run you through, we still haven't found any kind of setup in terms of how these will be exchanged and what kind of technologies will be used. But I just found one paper that kind of talks about peer-to-peer blockchain service, for example, and how users and the market will exist, and how people, the users and the ultimate say the asset will be sold and how it will be monetized. So this is still in the early. So we were actually looking for better models, or we'll work with maybe companies that are in the business to kind of figure out what model will work in terms of being able to capture this and making this transactable. In terms on the right side, you will see that the kind of process that goes through.
Time is limited.
Okay, so I'll just finish in 30 seconds. So just so this is something that we will try to achieve. So in terms of policy implications, I just quickly run through 2 or 3. So making nature-based solutions as a huge opportunity will exist in ASEAN. So we want to cover that and be able to capture that more in terms of data potential and the challenges and the opportunities. And we will obviously use examples of Singapore, the business models that's required for fintechs to operate here, and also looking at other the fintechs, technologies that are being used. So real-time satellite data, AI, machine learning, APIs as well, which is really important for how data can be transacted. And then looking at the challenges, we do see pricing as one big challenge, and of course regional cooperation will be really important, because most of this will, even if it goes through Singapore for a start, I think maybe countries will start developing their own systems. So I'll stop with that, and I'll be happy to take questions. Thanks.
Thank you very much, Dr. Darish, for this interesting chapter, which is completely fits in the scope of this book, and it's exactly talking about the green digital finance. So thank you very much. So next I would like to invite Dr. James Paradise of Asia Research Center for having his presentation on the role of green digital finance in achieving SDGs in China's Belt and Road Initiative. Dr. Paradise, please.
Thank you. So my presentation is on China, and the structure will be as follows. First, I will present my research question. Then I will identify a few unifying ideas, which is an attempt to situate my topic in a larger international relations, political science context. Next, I'll examine the relationship between the SDGs and the BRI. Then I'll consider green digital finance. After that, I'll look at the central bank digital currency that China is developing, and also business enterprises. The last 3 sections will look at the performance of China's endeavors, policy recommendations, and conclusion. My research question is, it's very straightforward. How is China using green digital finance to achieve sustainable development goals in the BRI? So there's 3 components to this question. green digital finance, sustainable development goals, and the BRI. And what I'm trying to do is to understand how these different parts fit together. One of the challenges of doing this is that these parts are moving, which is another way to say that what China is doing is very much a work in progress. Unifying ideas. The first idea is that the use of green digital finance to achieve sustainable development goals is part of China's quest to play a larger role in global environmental governance. As Chinese President Xi Jinping has often said, China wants to reform the global governance system in a way that allows developing countries to have a larger voice. And one area to do this is focus on environmental issues. Second, both the Chinese state and Chinese business enterprises are involved in green digital finance activities. Third, tensions exist between development and regulatory imperatives. These tensions have come to light in recent years with the passage of new regulations in response to the P2P crisis in China, and also the suspension of Ant Group's IPO. Fourth, a new hybrid model is emerging in which fintech innovation and supervisory regulation are more evenly balanced. As Xi Jinping put it, and I quote, China will establish and improve the platform economy governance system, giving equal importance to development and regulation, end quote. Earlier stages of development include a top-down model in which regulatory agencies were in charge, and a bottom-up model in which tech companies were driving innovation. What is the relationship between sustainable development goals and the BRI? The BRI can accelerate the achievement of SDGs by providing public goods. More financing is needed to overcome bottlenecks, and fintech can play an important role in providing financing. In regard to the first issue of accelerating achievement of the SDGs, support comes from the Chinese leadership, which has emphasized the importance of the BRI in implementing SDGs. The UN Secretary General, who has talked about the linkage between the BRI and SDGs, and others who've talked about synergies between the BRI and SDGs. Green finance or green digital finance, which I break down into two parts, the green finance part and the digital finance part. So on the green finance side, a lot of things have happened. China's created green finance guidelines, including green credit guidelines from the China Banking Regulatory Commission, guidelines for establishing the green financial system, which came from a number of Chinese government agencies, and green investment guidelines, which come from the Asset Management Association of China. Green Finance Committee of the China Society of Finance and Banking was set up in 2015. The G20 summit hosted by China in 2016 included green finance as an important topic of discussion. And China is developing a major green bond market, and public-private partnerships have emerged for green finance. Just a bit of detail on the green bond market. In the first quarter of 2021, Chinese companies issued $15.7 billion in green bonds, which was greater than that of US companies. That said, the green bond market is only a very tiny percentage of China's $18 trillion bond market. Digital finance. Here too, a lot of things have happened. The BRI Visions and Actions document, what is essentially the founding document of the BRI, refers to the Information Silk Road, which later became known as the Digital Silk Road. The People's Bank of China began the Green Finance Information Management System in 2019. Ant Financial Services and the UN Environment Program founded the Green Digital Finance Alliance. And digital finance is seen as helping boost financial inclusion among BRI participants. So what all this adds up to is an institutional framework that's being established for green digital finance. Now, another part of this ecosystem or infrastructure is the China Central Digital Bank currency, which is a hot topic these days. So it's known as the Digital Currency Electronic Payment, DCEP, the Digital Yuan, and the eCNY, among other things. It's undergoing trials in China ahead of a possible launch for the 2022 Beijing Winter Olympics. It may be used in BRI countries for consumer purchases. Here I'm thinking about like Chinese travelers in BRI countries, spending money in local shops and using the digital currency to pay for their purchases. Settlement of cross-border trade, debt servicing, and payment for infrastructure projects. It's expected to help internationalize the yuan. It involves participation by Chinese companies. Just on that last point, what's relevant here are design considerations. So under the way that it's designed, there's two tiers. There's the central bank, which issues the DCEP to commercial banks, and the commercial banks then issue it to clients by providing wallets. So, that's one way in which Chinese companies are involved. Business enterprises. So again, this idea of cooperation between the Chinese government and business enterprises. Chinese companies with international business include Baidu, Alibaba, and Tencent. And there are many different companies in their groups. Areas of fintech business include e-commerce, mobile payments, and digital banking. Performance. Questions exist about how environmentally friendly BRI projects are. Just to give you a flavor of what people are thinking, are articles entitled "Greening or Greenwashing the Belt and Road Initiative," the potential climate consequence of China's Belt and Road Initiative, China's BRI negatively impacting the environment, making the Belt and Road environmentally sustainable and toward a real green belt and road. So, what are the concerns? Well, pollution, habitat destruction, biodiversity loss, projects that use coal and fossil fuel. Lastly, outcomes depend on China and host country actors. And, this is a very important point. So, how things play out depends not only on what China wants to do, but also what's going on in host countries. in areas like environmental standards, which may be very weak. So, what is needed, is performance standards that apply to all countries along the BRI. And that idea allows me to segue into the policy recommendations. First, there should be more impact assessments of BRI projects with regard to environmental considerations. There should be more investment in clean energy, and there should be more international standardization of what qualifies as a green bond. And there's been some earlier discussion of this very important issue. On this point, there has been some progress made. Earlier this year, the Chinese government issued new rules for green bond issuances. Under their new rules, projects which used coal or other fossil fuels would not be allowed to issue green bonds. Conclusion. The BRI is being leveraged by China to raise its profile in global environmental governance, but there are many challenges on the implementation front that may curtail its ability to carve out an unequivocal leadership role. And green digital finance can be used as an instrument to achieve SDGs by bringing in more investment linked to environmental considerations. So I'll end there. Thank you.
Thank you very much, Dr. James, for the interesting presentation. It's very good that we have a chapter on China, and in this book, it's very important, and especially since it's considering the Belt and Road. So it's not just limited to the mainland, but also other countries that China is involved in. So the final chapter of this section is by Dr. Asif Roman of University of Oulu, Finland. So the presentation and the chapter title is Green Micro Startups, Financial Innovation and Green Practices. It's based on a qualitative case study from Finland. So Dr. James, please close that one. Okay, so Dr. Asif, please share your screen.
So, hello everyone. Can you see my slides?
Yes, it's clear. Just please make it full screen.
Yes. Can you see it now, or it has split to two? Let me, okay, disconnect it. No, now it's fine, right?
Yes, it's clear. Please start.
Yes. So, yeah, so I'm Asif Rahman, postdoctoral researcher in Oulu Business School, University of Oulu, and I will be working with Professor Ahmed Arsalan and Professor Shlomo Tarba on this very interesting topic. So, green micro startups, their financial innovation and green practices, and we will be using qualitative approach. So the idea is that it will be part of Green Digital Finance for Achieving Sustainable Development Goals book that is edited by Dr. Farhad and Professor Hyun. So our topic of interest would be case studies on utilizing innovative finance and fintech in funding green products. So the overview of this presentation, I will start with motivation and background, then go to what is the question that we are trying to address. So summary of the sample and methodology, then briefly introduce the businesses that we are like micro enterprises we are taking, what is their focus, or like business focus, and the greenness. Then I will conclude. So here I put this picture of Finnish forest that kind of gives a true idea of how Finland or looks like, what Finland is overall. So it is basically a forest mostly. So the way how I see it. But and then it is unique because they have like they are considered front runners in terms of sustainability and greenness. But when you see it on the map, they are surrounded by people like, the countries like Nordic countries, Scandinavia. So there is Norway, there is Sweden, and they are like Denmark. They are champions in this field in green and sustainability. So when you compare Finland in Nordic context, it is the worst performing. So that makes Finland unique, and also it's a small country. And then I think it is interesting. And another thing about Finland is that it has its own challenges, even though it is full of forest, and in that sense, I will say that there is not enough, like there is not too much carbon emission, but they have issues like Norway has this hydro project potential, so they have clean energy, and Finland does not have like those abundant, cheap, free energy or clean energy projects. So this gives them bad ratings comparatively in Nordic context. So that's one of the reasons. And of course, then I'm stationed in Finland. I'm originally from Pakistan, so I thought that it would be nice to bring Finnish perspective. Then as I did my PhD in finance, and my background was asset pricing. In asset pricing, there is this, shareholders trying to earn more profits in next quarter. So companies are always under pressure to maximize their profit. And so they have to do practices that are profit maximization oriented. And in that they have to sacrifice, or they had to traditionally sacrifice a lot of things that we are now talking in terms of sustainability and green practices. So now, as we all know, that it is becoming a very important concern. So now the debate is between whether we should maximize shareholders' profits or stakeholders' overall well-being. So I think that from my background asset pricing, I think this is very interesting that we are slowly and in a nice way, we are shifting towards maximizing stakeholders' well-being, profitability, not just shareholders. Another thing I would like to talk is Ikea. It's on our border here, and when we go, things are cheap, and they are mostly like good quality and recycled, and they have good practices. I read somewhere that they have been resisting to be a public listed company because they fear that when they will be part of stock market, then they will have to satisfy shareholders' needs and profit maximization stuff. So they resisted that just because they can focus on their sustainability practices. That I think is a very good example. Then about fintech, financial technology, it is on the rise, and it's a big topic. A lot of research on it. Further into fintech, we can think of cryptocurrencies. There were some presentations, for example. Dr. Peter Morgan talked about Bitcoin and Bitcoin's recent headlines about their carbon footprint. So, and then another emerging topic is this decentralized finance. So that's also part of fintech. Then the topic that we are focusing on is what is green fintech. So first of all, I would say that when I started working on it, when I saw this call from Dr. Farhad, I was really impressed that you guys are organizing it, you're working on it. As I see it, it is a cutting edge knowledge, and there is not a lot of literature available on green fintech. So there is on fintech, there is on green bonds and green climate finance, but when you mix it, that becomes quite unique. So fintechs, one of the definitions that I saw was from this Blackstad Allen, that what is fintech's role in achieving sustainable development goals? So that could be called green fintech. So how fintech helps achieve our SDGs. Then another aspect is micro firms from the context of fintech, sustainability, and green finance. Then when you see these things, when you mix these aspects together, it becomes quite unique. And micro firms are important because according to EU Stat 2019, in Europe, 93% of the firms are micro enterprises. So then micro enterprises have different strategies and operational dynamics due to their agility and resilience linked to small size, entrepreneurial orientation, and relative lack of resources. So then in our chapter, we are focusing on highlighting the literature that is available and how unique it is and how important it is. So we will highlight that, and then we will conduct in-depth qualitative assessment of fintech startups that are micro, that are based in Finland, and that pursue green practices. So Finland has been, as I discussed this thing earlier, that Finland's context, then our literature review suggests that Finnish micro startups, fintech startups focusing on green projects and sustainability are rare to find. And thus we aim to fill this contextual and empirical gap in this chapter. So we started with collecting Finnish fintech startups, and then we were filtering based on that they are micro enterprises, they are pursuing green, sustainable projects and strategies, and then we came up with a really short sample, and then that they are fintech. So we came up with 3 startups that fulfill this criteria, and they were like representatives. They were quite good. So we present their business focus, their financial innovation, and value addition to existing firms, especially other small businesses, and their green practices. We use a qualitative methodology where publicly available resources will be complemented with interviews where possible and where needed. Moreover, secondary sources of data and published reports will be utilized. Then a brief summary of the selected sample of firms. So the first one is called, so OY is an enterprise that is listed in Finland. So that's why you see OY in all 3. So the first one is Bankify. Its industry classification is software design and production, and it is a micro firm, all of them are. So their number of employees are 10. They were started, inception year was 2016, and they're using this IT consulting, IT services. The second one is Recept Hero. So the quite same thing, except that they have 3 employees. They started in 2018. And the third one is Cooler Future. So they are classified as management consulting. They have 4 employees, inception year 2019, and management consulting and investments as business description. So their business aims, the first one, Bankify aims to make sustainable investment effortless with personalized recommendations and automated rules while increasing recurring sales. So Bankify's customers are companies that build successful end user solutions and accelerate the change towards innovative, sustainable practice finance. Their partners provide capabilities to enhance their offering and help create holistic E2E, enterprise to enterprise solutions for Bankify's customers. Bankify's products aim to empower marketplaces, fintech, retail banks, and other financial institutions to drive user engagement and increase revenues. So as we can see that they are either, although they are micro enterprises with very few employees, but they are aiming to impact on a much bigger picture. So they are dealing with customer like big customers and banks and on much bigger scale. Similarly, for Receipt Hero, they work with banks, merchants, PSPs, app developers, and deliver receipts automatically from merchants to customers, banking and accounting apps. So here the idea is that when you go for groceries, you ask that do you want your receipt or not. So when you get the receipt, usually you have a look at it and then you just throw it away. So these companies trying to say that you don't need receipt, you will get it in your accounts, online accounts. So
but
in this,
the time is limited.
okay, so can I have 1 minute?
Yes, please.
All right. So then the last one is Cooler Future. So it's an investment fund that takes climate change as seriously as investing. Then I will say, yeah, so these 3 slides are what are their green practices. I will quickly say that. So they are engaging in green engine. They're helping users switch to sustainable alternatives and emerging environmentally conscious customer segment. So similarly, the Receipt Hero, one important thing about them is that they will be donating every customer that they will get. They would donate to a charity that would plant 1 tree per customer. So then Cooler Finance, they are using a methodology that I will say that impact first methodology to choose their investments for their customers. So they would first see what are the best green projects. Then among those projects, they will run this financial analysis and then make a unique portfolio among those green projects. Then they will monitor those portfolios quarterly, and then they would rebalance their investments. That I think is a very unique and a good thing. So one of the last slides that I have is this one. It talks about, it also touches on this Professor Yoshino's idea of unique Greenness index. So in Finland, most of the firms are has been using ESG ratings, and ESG ratings are, as we all know, are not as green, and they were thought to be, but they are not as. For example, in Cooler Finance website, they are using this table where they are saying that these are the things that are part of Cooler Finance, that Cooler Finance is taking into consideration that are not part of ESGs. So you can have a look at it in my slides later on, but it tells the idea that it's very easy to greenwash certain projects, even though they are not as green, especially using other terms. So I also support his comment of a need that we have an index that is measuring greenness of a project on a global level. So then finally, it is a work in progress. And I again want to thank to organizer panelists and Dr. Farhad for giving us this platform where we are working on this cutting edge topic. We are very excited to work on it. Thank you very much.
Thank you very much, Dr. Asif, for the interesting presentation, which is going to be based on a qualitative study that you will do based on Fintech sample. So we finished the presentations of this session. Next, we are going to have a discussion, and I would like to invite Dr. Yonsei of Yonsei University. He is also the co-host, co-organizer of this event, and we organize this event together, and we are editing the book together. So Dr. Hyun-suk, please.
Thank you for your kind introduction. Finally, it's my turn at the end of the day. When I start this project with Professor Farhad, I expect very few papers because the presenters mentioned this area, the green digital finance is relatively new and less explored by the academics. But yeah, I don't need to worry about our book project because yeah, we received many good and insightful papers. Yeah, before I give specific comments, here is my suggestion. Professor Fayed and I should write some introductory chapters to define what is green digital finance, because as Professor Yoshino and other presenters mentioned and pointed out, we have no common definition for green finance, and the coverage of digital finance is very extensive. So yeah, simply we can define the overlapped area of green finance and digital finance as a green digital finance or green fintech. So yeah, that introductory chapters encompass all chapters presented today and tomorrow. And the first presenter, Dr. Zhang, introduced briefly current status and the challenge of green digital finance in Korea. Actually, the Korean government, they proposed the Korean New Deal, and that initiative consists of two main policies, Digital New Deal and Green New Deals. So the government provided the fiscal support, and the relevant system also implemented to support innovations in the economic and the social structures. And in addition, the government investment will be used as a priming water to mobilize a private investment and stimulate a great transformation of a country's economy and societies. Yeah, Dr. Zhang just briefly mentioned the Korean New Deals. Actually, their proposal is very good in terms of today's themes, the green digital finance. So the Digital New Deal includes 4 focus areas, include the stronger integration of data, network, and artificial intelligence throughout the economy. And secondly, digitalization of education infrastructures. And thirdly, fostering the untapped industry. And lastly, digitalization of social overhead capital. And the other pillar is the Green New Deal include the 3 focal areas. The first one is a green transition of infrastructures, and second one is a low carbon and decentralized energy, and the third one, the innovation in the green industries. However, in terms of financing in Korean New Deal, there is a disconnect between green finance and the digital finance, unfortunately. So maybe Dr. Zhang will connect the Green New Deal and the Digital New Deal, and his the chapters will provide a very useful policy implication for the Korean New Deals. Yeah, because the environment and social sustainability may well be facilitated by the digital finance, such as AI, big data, distributed ledgers, technologies, and the blockchain, Internet of Things, as presented today. But if you look at the current state of the financial market is aggressively adopting new technology like fintech, but its application of digital finance innovations combined with sustainable finance is very limited. So there tends to be a disconnection between digital finance and the green finance in case of the Korean New Deal policies. So I think that the digital finance can accelerate the greening of financial flows, and green digital finance can integrate environmental risk and opportunities into day-to-day financing and investment decision, as well as the development of innovative financial services and the green financial products. And let's move on to the second papers, the fintech ecosystem to advance the finance for carbon offset market and conservation in ASEAN. They identify barriers and opportunity very clearly, and their research questions are very interesting. How to leverage the sustainable finance through fintech and the rollover green fintechs. And as a case study, they going to do some case study on the Climate Impact Act and the project Green Print by the Monetary Authority of Singapore. But if I look at their proposed article headings and the subheadings, they list many research methodologies, literature reviews, and gap analysis and network analysis, and the quantitative data analysis, and including the case studies. So I think some chapters are very extensive. So yeah, I think you should narrow down some the chapters. That will be the smoothing the stories. And also the third chapters by Dr. Paradise, and also I read his the extended abstract very interestingly, and his research question is how the China using green digital finance to achieve SDG in the context of a BRI. And his unifying idea is the use of a green digital finance will play a larger role in global environmental governance. And in terms of SDG and the BRI, the Fintech, I think that the green Fintech or green digital finance can play an important role in providing new and innovative financing for SDGs. And also he touched upon some green digital finance. Yeah, China already announced the Digital Silk Road initiatives aimed to improve digital connectivity in participating countries, and also PBOC, they create its own digital currencies. And I think that digital currency also unlock the new sources of finance for business with the environmental or the social outcomes. And in the concluding part, I think you are the expert in the political the economy. So the green digital finance in the BRI will impact the global environmental governance and the global digital orders, I think. So if you add more the political economy analysis, I think yeah, that your chapter will be excellent. And the last two papers, yeah, I also, yeah, I think it's a very interesting papers. And I think this is the first study on the Finnish, the green fintech startup. They chose 3 startup, and Bankify and List the Hero and the Cooler Futures, and they do some comparative analysis in terms of the sustainable finance. And I have a very specific question about the impact first methodologies. Generally speaking, when it comes to impact investing, it is very difficult to measure environmental impact and also define the metrics. So in case of Cooler Futures, what is the metrics to measure the environmental impact? That's all for my comments.
Okay, thank you very much.
Battery 70%.
Thank you very much, Professor Hyun-Suk. So yes, so we will have time for answering Dr. Asif. Just before that, let me also have some comments. So I also found that the presentations were so interesting. All presentations of this session was very interesting. Just I have some comments. For example, the presentation by Dr. Yu is very interesting, bringing examples from Korea. However, it would be more relevant to the scope of the book to focus on digitalization. So since regarding the green finance, as I've mentioned, we had this book, This is Handbook of Green Finance. So already published. So it's by Professor Jeffrey Sachs, Professor Vijay, Professor Yoshino, and myself. We edited it, and Professor Yonsei also contributed a chapter. So it means we cannot bring something more than this on green finance. And actually, the publisher wants us to focus on digitalization of green finance. So this is very important, not talking about green finance, but the digitalization of green finance, that what is the role and what window the new technologies and can bring for making the green finance easier and unlocking the green finance. So this is what we want to focus in this book. For example, you talked about ESG bond or carbon emission trading. So these are good, but please discuss that. How does digitalization can increase the effectiveness of these green finance tools? So this is my comment. And regarding Dr. James' presentation, this is also very interesting. Just I request that please merge these two things, digitalization and green finance. So for example, your chapter can answer to this question, that what is the role that Fintech can play in bringing finance in BRI? Or what is the role of CBDC in green finance? So talking about CBDC as a whole is good, but what is the role of CBDC in green finance? And regarding Dr. Darish, so I don't have any other comments. It is completely relevant and fit in the scope. Dr. Asif's chapters is also interesting. It's good that you are talking about the businesses, but please more focus on their digital part. I mean that qualitative study that you are doing, this is relevant and this is related. And before I ask the speakers to answer the comment question if they have, we have two comments in the chat box that let me read them. So one interesting comment or question is by Mr. Junsu Lee. He asked that I'm a bit confused about the difference between the digitalization of green finance and greening the digital finance. So this is an important thing. So digitalization of green finance or greening the digital finance. So these have some, let me answer this. So these have some overlapping. However, so in this book, at least in this book, we want to focus mainly on the digitalization of green finance. So it means mainly on the first part, that what is the role of technological innovations in order to scale up the financing, especially related to SDG projects. So technological innovations can bring more transparency, accountability, decentralization of financial system, improve the risk management. And in this book, we want to find out that what is the role of, for example, artificial intelligence, distributed ledger technology, blockchains, peer-to-peer lending platforms, big data, IoT, matchmaking platforms. What is the role of these technologies in scaling up green finance? This is the objective of having this book, that I hope we have the final chapters completely related to this objective. And we also have one question by Professor Yesengali Oskembayev. He asked that in general, a wide range of companies, including Apple, Unilever, Bank of America, have issued green bond to finance climate-friendly projects. We observe some positive environmental results. Do they also contribute to the companies, to the issuing companies' ROE and ROA? So let me answer it, then I will ask the panelists if they want to add to it. So generally speaking, there is no theoretical relationship between issuance of green bond and increase in the ROA or ROE. on the return. However, there are also several studies in the literature that many companies, in order to show that they are environmental friendly companies, they start to issue green bond. So that will bring more impact investors, and this will bring a new window for financing their projects. However, the most important thing that needs to be asked is that whether these bonds are really green or not, or if they are green, what is the greenness ratio that mentioned by Professor Yushino, greenness ratio of project. So maybe company X is issuing green bond, but only 5%, 10% of these funds are allocating to green projects. So this is very important for that need to be considered. So if there is any comments or anything that wants to be added by panelists, please. Dr. Asif, do you have any comment?
Nothing specifically, but just that it's a very valid point that Professor Hyun raised, that impact first methodology metric. So we will highlight that and see what metrics they are using. But also I think that it leads to the same debate that there needs to be a unique Greenness index that is standard and global. So that's it.
Thank you very much, Dr. Asif. Is there any other answer by the panelists?
Thank you, Dr. Hume, for your comments. I think, yeah, during the proposal, we just tried to, because we didn't know how much data exists and how much, what methodology we could use. So we kind of proposed, we put in a lot more than we can do. So obviously fine tuning is what we are figuring out, what to do, like what data exists and how we can analyze that. Just looking at, so one of our things is maybe looking at the market size itself, kind of establishing that, and then also looking at other business models. And the case study of Singapore is obviously something that's interesting. So we thought we would definitely cover that. Just to add on to what Professor Fahad said on terms of green and digital finance, I see one more new thing with for example, what we are trying to do is that looking at digital technologies providing completely new green finance opportunities. So because without that digital technology, you wouldn't have the ability to kind of say sell and buy, like offsetting, nature-based offsetting kind of solutions, right? So it's like buying an apartment now, but it's just you're just buying it, and you can sell it once you're done with maybe offsetting your your positive carbon footprint. You can kind of sell it to somebody else, so they can also benefit from that. So this is something completely new that I think green digital finance provides. So I think that also exists within this framework. So I just thought I'd add that on. When I was thinking about it, I felt this is something that provides a new opportunity for green digital finance. Yeah, thank you.
Thank you very much. So is there any other point by the panelists?
Hello.
Hello.
Hello. I'd like to share a little bit of my view regarding today's seminar. I think it's really interesting. There's a lot of new ideas, and from my point of view, what I like to think is that in order for green digital finance to succeed, it is very important to have two aspects. One is regulations. The other aspect is data. And regulation data actually is the two foundation of for me to the green digital finance. Regulation, because you want a company to report, to disclose by obligation, not by not voluntary, because most of the time when you see that voluntary disclosure are not working, because they disclose what they like, and therefore the later we lack of relevance. So, and then that will also regulation also will avoid greenwashing, will avoid fraud, and also we give confidence for investors, because without confidence, for example, in terms of labeling, how to label any product as green, investor will not jump in those products. And then the other aspect is data. So regulation objective is to create data, because without the data, without the regulation, the data will be very small. So regulation forces the data to be there, and the data therefore had to be standardized So then you will get, you will get to be able to compare the data and the data being accurate and also available. And when you talk about distributed ledger, like a blockchain, will work with data that is standardized. I think the data that is not standardized will be very difficult for the distributed ledger to be used. So these are the two foundations. I think with these two, then I think we can develop a lot of system that is based on the availability of data. Okay. That is my comment.
Thank you very much, Mr. Cha, for the important comments that you have mentioned. Exactly, the regulation and data are very important, and it's good that we have a chapter by Professor Vijay Kumar Singh. He's professor of law and he's working on regulation, so he's contributing a chapter on regulatory framework. Okay, so if there is any other comment or question, if no, since we are behind the schedule, so please let me to wrap up this session and today's webinar. I'm grateful to all panelists, discussants, and to participants for asking questions and comments. And thank you very much for joining. We will have the second day of the webinar tomorrow. It will start at 4 p.m. Japan and Korea Standard Times. To the panelists, you will receive the different login information for tomorrow webinar, which is different from today. So tonight you will receive it. Thank you very much and see you tomorrow. Bye.
Thank you.
Thank you. Have a great
Thank
evening.
you. Bye-bye.
Thank you. Bye-bye.